Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode of the last few months, even maybe all of 2025, it's been a really downturn in the credit card and bank promotion space. A lot of doom and gloom. So today we're going to break down the strengths, weaknesses, opportunities, and threats of the credit card market to see if it's really that bad or if it can bounce back in our favor. So, of course, if that sounds interesting to you, go ahead, press the subscribe button, and let's get to work. If you want to feel like you're at work, I'm going to borrow a tool from work, which is called a SWOT, not SWAT like kick down your door. I mean, it depends on how you take your money from the banks, I guess. It could happen, but we don't do it that way here. Strengths, weaknesses, opportunities, and threats. And we're going to break down, go through each one. Basically, I list 5 strengths, 5 weaknesses, 5 opportunities, and 5 threats for the credit card space. It could be fun, or you could feel like you're at work either way. But I think it'll be a good exercise because, again, we've gone through 2025. A lot of you have gone through it right there with me. A lot of denials, for sure. A lack of bank promotions, for sure. Now, this is the credit card channel, so I'm probably going to keep this mostly credit cards. But still, you get the point. It's been pretty tough as of late. And I'll just say, you management consultants out there, spare me. We're taking a tool. We're trying to adapt it for TV here to make it fun, right? I might not do it 100% right, but I went to business school too. I get how it works. You just did better than me. That's why I'm on the internet rambling and you're out there working at Kinsey & Company. So anyhow, let's get to work here. So the first one is strengths. And I'm limiting myself to 5 because we could go on and on and on. But I figured I'd do 5 and then we'll talk about them. And then, you can contribute yours down below. We can chop it up down there. Tell me where I'm right, wrong, whatever. So 5 strengths of the credit card market. So first of all, it's an easy product to sell. I've said this before and I'll say it again. Credit cards are not a serious product. I know people can get in trouble with them, but it's not serious because it's stated income. It's just an automated underwriting tool. Here's your decision in 20 seconds, let alone the pre-approvals, pre-qualified offers they send out. They're very easy to sell. They're very easy to cross-sell. That's why when we talk about going in branches and opening up checking accounts, there's typically a screen where the bankers to offer you a card as well. I just did this a month or 2 ago at Key Bank. Open a business account. The reason you go in branch because the promo offer was, hey, we'll just give you a credit card. So much so that Key Bank, I opened a personal account. That was for a business account. Then I opened a personal Key Bank account, got locked out of my account, had to report to a branch with identification to get it unlocked. And while they're going through the process, before they know who I am and verified me as not a fraudulent person, they're like, hey, you're qualified for a Latitude card. That's the products we're talking about. It's very easy to sell. So it's not like we're trying to come up with this new business channel, right? Another one, American or cultural dependencies on credit cards. On 2 fronts, really. On one, we love to buy things, spend things. I mean, we're going to have, by the time I'm taping this, you're watching this, probably a month from now. I'm taping this right in early September, right before the iPhone event. And I kid you not, you know how it's going to go. Once the iPhone looks the exact same or does the exact same, people will be mad that Apple didn't give them enough things that they could go out and buy. It's just how we are. We love to buy things. We love to spend money. Companies know that. Nice things are fun. That's not going anywhere. I would also say the fact that the world's kind of set up, but you need a credit card. I know Dave Ramsey's cohort has proven that you can do things like rent a car and get a hotel room without a credit card, but these things are really set up for you to have a credit card. Especially going places to pay for things. Cash is inconvenient. Like, you're going to get everyone in the line is going to hate you if you're paying cash. You don't have exact change, on and on and on. So, do you need a credit card? No, Ramsey's right about that. You don't need one. But if you look at it, life is set up for you to have one, all the way from building credit. It's the very easiest tool you can get to instantly build credit in a few months, on to just making your day-to-day life much easier. The co-branded deals are a massive strength for these card companies. We're continuing to see them. When the Delta came out and was like, hey, this is a multi-billion-dollar deal, and that's when some of the other partners were like, hey, we want to get more of it. I think IHG went back at Chase and was like, hey, we want more, because we can see the deals, right? There are still other companies who want to do business. A lot of times I think it's like Instacart and a few others. I'm blanking on them right now, but like with Chase, they'll help them do, be banking consultants, take them through IPO, perhaps win the business, and part of it will be getting them a credit card, right? We've seen Built bounce around a lot as well. I think there's plenty more co-branded deals to have, and it doesn't even mean it gets you your own credit card. A lot of it can mean doing what American Express has done and others have started to do by outsourcing your cost by offering a customer a credit or coupon and having the vendor pay for most of it. Those things are huge, and that business model isn't going anywhere. I would say you could easily put it under number 2, which is cultural dependencies. But I will say, for as far as us and how customers go, it's still the most secure way, one of the most secure ways to pay. Again, yes, you can use a debit card, but as you know, the benefit is the protections. The debit cards do have more protections than we give them credit for. But again, when you get down to it, if your debit card's compromised, they're stealing your money. If your credit card's compromised, they're stealing the bank's money. And that's fine. There are better protections, guaranteed protections in place. So again, that goes to making everyone want at least one. And then I would say, again, in our favor, value proposition, it's something as simple as a Citi Double Cash. That's a 2% coupon off of everything you buy, right? Just pretty simple. There's not an easier way to make back money on your spend because it still stacks. Even if you want to find sales, find coupons, find discounts, still get 2% off of the end. Like that's great. There's really nothing out there that matches that. So these 5 things are pretty much strengths of the card industry that I don't think are going anywhere. Again, sound off down below what you think, but these things bode well for them. Now, weaknesses generally in this exercise come from within, so you could fix them. So I would say, again, 5, limiting ourselves to 5. Reliance on travel. We've seen a lot of the higher end flagship cards are travel focused, which is fine because that's definitely a customer you would want because they're probably have more discretionary income. They're willing to spend more day to day, that whole thing. But I think it gets too reliant on travel, and a lot of them have tried to play into lifestyle cards, but it doesn't really work. It seems like they're confused. We can do the airport thing, we can do the travel thing, but we know it's led to lounge overcrowding being an issue, and it's led to some of these cards being restructured. I mean, the new Alaska card gives you lounge passes, and they're only quarterly, I believe, which isn't. That's probably one of my least favorite things about it. The Platinum card has restricted your Delta access from unlimited to 6 passes or 8 passes. Centurion, you don't get guest passes anymore unless you spend $75,000. This reliance on travel has caused, as you know, overcrowding. It's caused devaluation of these benefits. Everyone has Hilton Diamond because you can just buy it very easily, right? So they're going to have to find something else besides travel because people who don't travel still spend quite a bit of money, and can spend quite a bit of money. I don't know that you want to just straight up give up on that group as well and say it's only for travel. And if you don't, well, you're stuck with a 2% card. There's got to be something else around there, a true lifestyle focused one. And I think they're struggling with that right now. Relying on lesser issuers. This comes up a lot in cards that could be good, like the Walmart, the OnePay card. They're OnePay and Walmart have a deal, and Walmart owns OnePay, but it's issued by Synchrony, and that causes a lot of people pause. Now, maybe not a lot of people out there who just average people who don't know or don't care, but at the same time, a lot of people here have genuine concerns, and rightfully so, about getting a card from Synchrony. The Apple card, believe it or not, it's run into this as well. Like it was with Goldman Sachs, which sounds like it would work, but as you know, it didn't work. And, Apple at this point kind of has to end up with one of if they haven't decided already by the time you're watching this, has to end up. The last rumor was they were in deep conversations with Chase, which makes sense, but the Apple card with Synchrony sounds awful, right? And so when these companies are coming out with their new products to market, you can't really rely on lesser issuers. It's a little bit risky. That does weaken the product in my sense. Generational divide. Back to focusing on travel. The Platinum card, one of the questions I always get is how do you think American Express is doing? Well, American Express is doing fine. They're doing fine with the younger, I don't know what letter it is, Gen Z or X or whatever, one of the letters. They're doing fine with them, and they seem to love the card, which is great. But it tends to ignore all the other generations. And we've said, in the past, older people spend money too. Older people are the ones that have the money, right? So if you're just ignoring them altogether, does that eventually create a gap in your customer base? Makes sense right now. Everyone's loving these Platinum cards and these credits and everything, but they are starting to create a little bit of a divide, I think, which could be easily fixed. Now, to that point, growing with their customer base, this one I'm primarily looking at Capital One. Capital One is an example because, you'll start out with the Capital One card to build credit, which is fantastic. And then after a year or two, the Capital One rules kick in, and you can never get a good answer of how many cards can you have, or if you've built up too much credit and got too many accounts, and who knows who's to say what too many is. Well, the Venture X doesn't want you then, but that's like your next progression. And so it's easier to outgrow Capital One. They won't move the Quicksilver to 2%. Well, then you're going to leave and go to Citi or Wells Fargo or SoFi, anyone who's got a 2% card, right? So you can easily get outgrown. For the longest time, Chase kind of had this at the top end where they would ignore the bottom end. Now they had a student card and they flipped it to the Freedom Rise card, which is credit building / we can give it to students as well, which is kind of one and the same. But it's very hit or miss that a bank actually tiers up their products. Even American Express has kind of restricted it, but they don't make it obvious that they want to progress you through the system. If you start out with the platinum, you can't always get the intro offers for green and gold, and that seems restrictive to people who just simply don't know that. Scaring customers would be my last one as a weakness. For whatever reason, card companies, they seem to want to scare customers. You've got the big bold marketing print that's always fun and tells you exactly what you're going to get, but then the terms and conditions are always written in a way that are hard to understand. The fine print scares a lot of people, and people are always waiting to the I gotcha moment. And a lot of this is caused by the bank. A quick example to the travel piece would be you're selling these credit cards in the terminals, right? And it's not, I know we like to think we're the smartest people ever, but it's not hard to be like, oh, I can get 100,000 Sky Miles if I spend $5,000. Well, I have $5,000 to spend. Let me get that. Oh, there's a fee. I don't want to be paid. I don't want to be charged a fee. So let me cancel it before the fee comes due. And the issuer can be right because is disclosed. So yes, you don't close the account before 1 year. But if it's not easily disclosed, easily discoverable, then it kind of is the bank's fault. You're the ones who are causing your own problem with people canceling these early because you didn't tell them up front. In a way, it's like making a speed limit sign a math equation. You just don't do it. And for whatever reason, they really want to scare their customers. I'm not sure why they don't come off a little bit more friendly, be a little bit more friendlier, user focused. But that is a massive weakness that really keeps people away and wanting to change, and they're just waiting for the I gotcha moment. I hear that very often. All right, opportunities. What can they take advantage of? Well, this one will be funny, but the first one I wrote was wealth management integrations. Now, it's funny because right now, only Bank of America really does this in preferred rewards. The more money you have with Bank of America, the better rewards they get you through preferred rewards. U.S. Bank tried this. Technically, they're still doing it smartly, but it didn't really work well. But ideally, I haven't seen anyone copy Bank of America. Citi seems like they would, and there is a slight discount you can get from being Citi Gold, which is like $200K. From if you have that, you can get a slight discount on the Strata Elite. But in general, they've made credit card ecosystems like Chase has, for the longest times, the trifecta, then the superfecta. American Express obviously has its. So they've been making, card ecosystems, but they haven't really tied them together. And Bank of America, while I have the checking account because you're required to. I keep $1 in, and I have a Merrill Lynch IRA because to keep all the money in. Even then, I guess I'm not the target. I'm going to shop around my products, but at least they've made it sort of you get preferred rewards ecosystem, so you can get better pricing across the board. I don't see why others don't take advantage. Do they need to go to the amount that the U.S. Bank did? No, well, we've learned don't do that because it's not going to go well. In fact, everyone kind of knew it wasn't going to go well, but I still think there's opportunity we had to tie in everything else together. And they just seem to be tying in the cards and the travel portals, but what if you tied in the rest of it? I think people have proven, especially like the Apple cohort, that they just want to be locked in. People want to be in eco walled gardens. Same with Google. Google's always in antitrust cases, monopoly cases, and we don't complain. No one's yelling at Google like, oh my gosh, the government should break them up, unless you're competing with Google. But we like Google. It works. So we don't want them broken up. So people want that. I don't know why they don't do more of it. Number 2, decent customer service. Customer service is just, it's so awful sometimes. And I believe it's because we kind of sort of confuse it. Like a customer service's job is to follow a dedicated process and procedure, and hopefully that gets you an answer, but it doesn't need to get you an answer so long as they follow the process and procedure, which is true of all of our jobs as well. But for whatever reason, banking customer service is tough. And I think it goes back to the scaring part of customers. Just you phone in, you got to go through this phone maze of pressings to be able to talk to a person. And it's just terrible. If you need something, it just needs to be better. We don't need to dwell on that one. I think it's very obviously technology upgrades. Again, I don't think people are really going to go to these fintech deals, but some of them are simply much better at user interface and design. We've seen, we know that they're capable. I guess the banks are capable. They'll have spend trackers over here for coupons, but not over here for intro offers. Some apps are terrible and outdated. Some systems are really bad. Put in the extra effort, do the technology upgrades. I don't think people are asking for that much. I don't need to do this in the metaverse or anything, but some systems are just terribly designed. Not helpful. Expanding beyond travel, again, kind of plays off the weakness. I think what they're, for an example, I do think that, like, stick with US Bank, like where the Vikings play, they're in a US Bank field. There's like a really cool setup where they've got a US Bank lounge, for lack of a better word. We know American Express and Chase have put things in arenas. I think the Warriors play in like Chase Arena or something like that. It's Oracle, I don't remember. But either way, they have presences in there in those arenas and big places. I think that would help break out of the travel only space, because the way airport lounges are talked about, it's like a bar you would go to after work. It's just, for some people that's the case, but not most of us. And so with so many teams and a lot of teams playing, here in Michigan, the Red Wings and the Pistons play in the same arena. I'm not saying this is a big enough market for a bank to set up shop in, but you get the point. Like, that would help as well. Like, hey, we can go do that, sit there. It helps being around major venues, and that probably breaks off away enough from travel enough to give some diversification sometimes, but you can feel you're using the card or getting value from the card all the time, not just when you're traveling. Social media promotions. This one I'm always torn on, because on one hand, they used to hand out affiliate links all the time. They've since pulled back. It is a risk because, again, you have to audit people like me and say, hey, make sure you're doing it right, because if not, someone's going to try to go through me to get to Chase. So I barely have any affiliate links anymore, but I have often wondered why they don't. Like in technology and stuff, they'll do, not even travel, fly people out there, just like, hey, here's a 1 hour of like, here, we're going to tell you all the details of the card, and we'll send you a dummy card to unbox and everything and show off. I feel like there's going to be something there. I'm not really sure why they don't. Just send them in the boring envelopes. Some of them, I know, like the Apple Card comes in a cool box. So anything like that, I think that could potentially help with sale. An easy way to do it. We wouldn't get paid. I shouldn't be paid to talk about this. It's just, hey, do you want to get all the information correctly and have a demo card you can show? Like, I think that would be fine. But they don't want to do it for whatever reason. So last one here, threats. These come from outside. So interchange fee wars and capping interest rates. We know that, merchants have gotten together and said, hey, look, interchange fees are too much. They want to have it so, the payment networks cannot, it has to be like, it was like, if you had a Visa card, it has to run on a secondary payment network. It just can't be a monopoly, so that you have to run a Visa card through the Visa network. That's a big one. And then capping interest rates has been brought up. Capping interest rates on credit cards at 10%. Don't think either of these are going to happen, but it is still something that takes their time and resources to lobby against and fight. Sales programs. Again, with sales programs, it kind of goes back to the affiliate deal. It is tough they do lose access to some of their sales channels, except for the biggest, publishers like the Points Guy and such, because of, us having to, I guess, relay the messaging correctly, but then folks trying to be opportunistic. For example, if I say, we just say, open this card and you get, I don't know, $1,000. Well, that's technically not true. So all it takes is one person out there to be talking about your product, say something that is logically understandable but legally not correct, and then they're going after them. So I think the sales channels, which I'm assuming, because they've been really dialing back their affiliate programs and cracking, I'm assuming that's a threat. Buy now, pay later, a big one. For whatever reason, these services are coming up. So much so that, American Express, when I had the affiliate program, we're not supposed to say charge card anymore. We are supposed to say credit card with flexible payment options, because buy now, pay later has caught on. And buy now, pay later has also integrated themselves right into checkout as well, where obviously the card, you can, go through payment, but it's usually they're right there in big buttons, or just pay now, you go to another screen for card. So it's a little bit more in customers' face as the option. They seem a little bit more friendly and approachable than cards, but I think buy now, pay later, it's arguably the same thing, but, they're fighting over the same market. These other two kind of play into that: consumer education and negative outlook. Interest is, a bad word. People have learned that they shouldn't be paying interest, which goes to the capping of interest rates. But for whatever reason, buy now, pay later, saying there's no interest, there's just fixed payments. It's kind of the same thing, really, but people see it very differently. And I think that's going to hurt them as well. They have to figure out a way around it. And they have, to a degree, they've got, their own versions of payment plans and things like that. But again, there is a sort of negative outlook on credit cards, I believe, outside of this space. And then I would say the last one is the economic environment. This kind of mirrors back to 2020, when they stopped lending, stopped selling cards, and cut credit limits to protect themselves. I mean, I've often felt banks are kind of certain companies are trying to will us into a recession, so they can buy back stocks cheaper and whatnot. But either way, that could be part of the reason we're not seeing a lot of offers going on. And they did just hand out a bunch of credit and a bunch of cards the last 2 years between the Inc. 900s and all the other ones we've seen. So now, are we actually recession? Are we not? Are people, we see, different companies going through mass firings every day. Something they have to keep an eye on, and it does play into their sales as well and what they do. So overall, strengths, weaknesses, opportunities, threats. I'll kind of put a summary on screen for you, but that's kind of how I see it. A lot of closing thoughts here. I don't think the card market's going anywhere anytime soon, and primarily because of what we said in the strengths. Do I think they need to change some things? To a degree, but honestly, there's so many cards in so many people's hands, and we're still spending so much that it's probably fine. And when we look at this, I think it kind of can mirror the government or life, and the fact that, the bottom 10 and the top 10 are usually the ones who get affected the most. Everyone in the middle just swiping your double cash here and there, going from store to store, is probably fine and not really going to notice a change. I would say here, if you're watching this, we're probably top 10, meaning that, we're trying to take as big advantage as we can. And there are some higher up who are doing hardcore strategies and things like that. So that's probably why we're feeling it. And the bottom end, a lot of the threats and stuff affect them, because if we cap interest rates, well, that is going to, part of interest rates, for example, is to price in risk. And so if I've capped how much I can offset the risk by, well, I can't lend to you or lend to you as much. So bottom 10 affected, top 10 affected, most people in the middle totally fine. So no, I don't really think the doom and gloom is going to be that. I mean, I think it's cyclical, and we will get back to a point where offers are plentiful again at some point. It's just not right now. The rules will probably change somewhat. They probably won't be as open to churning as before, but we always find a way. So either way, I think it's fine. So we won't put any fires or thumbnails in this. But again, let me know if you think of the little work tool. Was it useful? Did you feel like you were in a corporate meeting? I don't know. Let me know all of it down below, as well as what you see for the card market as well. And lastly, if you made it this far, we could go through and do this for all the major issuers too. That might be fun if you didn't hate it. Do it for Chase and Amex, Wells, Bank of America, Capital One, like those guys. We don't need to do like Huntington, but we could do this for other banks as well if people found it interesting. So anyways, guys, if you liked it, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel. So we're posting content just like this every single week, and of course right back here every single Sunday with all the news you can use in the week that was in credit and finance. Of course, every single day over on ProfitfulContent.com. The channel's blog is always linked down below for, as well as on our homepage. We not only have the latest news stories, we have plenty of bank promotions and plenty of credit card offers as well. As always, thanks so much for watching. I'll talk to you very soon in the next one.